don't feel like I don't sound like I'm whispering or what, I'm loud and clear to you guys. I'm really sorry for delivering that content, which is very important and very crucial on a but with very poor quality, very poor sound quality. But then I had to fix that, and now I deserve, you all deserve a better version of this strategy and of this trade setup, which is the ID50. That's the topic today. So this is a remake on the ID50. If you understood the last one, and if you strived and managed to hear it well and understand it, it's fine, you can skip this one. But then if you also want more on this strategy and on the setup, and also if you didn't get me clear on that first video, you can watch this one, and you can profit tremendously from this one that I'm making right now. So guys, without wasting time, I'm Konam. If you hadn't subscribed, please hit the subscribe. If you didn't like, please hit the like button so that you get more, so that YouTube suggests more videos, more videos like this to you, and which is a plus for you and also a plus for me, since the video will be suggested to more people who want to watch this video. So guys, let's get into it. So this is defeat the market maker, DTMM. Let's get in. So there's what's called 50 EMA bounce trades. So these bounce trade are also called intraday. Among these trades, they vary with time frames. So let's get into it. Intraday 50, the ID 50 trade. That's what this trade setup is called. So actually, this trade setup is a trend continuation setup. It is the first pullback after an anchor is formed. After an anchor formation, this pullback occurs in all time frames. So the first one is the ID50, which occurs on the 15-minute time frame, and the second one is the H1 50-50 bounce, which occurs on the 1 hour chart. The third one is the H4 50-50 bounce, which occurs on the 4-hour chart. So for the ID50, the one that occurs on the 15-minute time frame, the rules are that an anchor, the first rule is that an anchor must be present. An anchor must be present. An anchor must be present on the left, to the left. There must be an anchor formed to the left. The second one is that the 13 and the 50 EMA should cross. The third one, the first pullback to the 50 EMA, guys, hear me well here. The first that's why I had to get the mic and remake this video, because this is the most important part. The first pullback to the 50 EMA must be 25 to 50 pips. I hope you got me there. Let me come again. The first pullback to the 50 EMA must be 25 to 50 pips. Like to see a quick move down back to the 50, or up back to the 50 if that's in the downtrend, or in down back to the 50 if that's in the uptrend. Moving on. The fourth rule: one should wait for price to bounce or trap off the 50, not just once price get to the 50 EMA you execute a trade. No, that's not it. You need to wait. Forex trading is all about exercising patience. If you don't exercise patience, you are taught patience by the forex trading markets, because you lose at the end of the day if you don't have patience. That's why patience is a crucial part of forex trading. So you need to wait for price to bounce or trap off the 50 EMA. That's the fourth reason. Is crucial. It's getting with the more that we're getting down with the rules, the more rules we're getting, the more crucial and the more important they are. All of them are important, but the more they just gain in intensity of their importance. The fifth one, this one has the entry triggers now. After you see after price either bounce or trap off the 50 EMA, these are the entry triggers. Why you should enter the same. All of these are entry triggers, but then these ones are the candlestick patterns that you should notice before you enter the trade. and what they should do. So what are these candlestick patterns? These are the railroad candles, these are the stars, the morning and the evening star, the cord of wood, or the shift candle. And all these candlesticks should close above the 13 EMA. If we are going to the down, if it's in the downtrend, and or above 13 EMA if we're in the uptrend. Let's move on, guys. This is really beautiful. I'm loving this lesson. I'm loving it. The sixth one, that's the last one right there. Unfortunately, I cannot position the numbers well. I need to just do this. The sixth one, the TDI confirmation. Really simple things. The RSI should cross with the signal line. Simple. Moving on. Examples now. So as we said, the first step is what? The anchor. The anchor should be present to the left side. After that, the 13 and the 50 EMA should cross. The third one, there should be a first pullback to the 50 EMA, and that should be within the range of 25 to 50 pips. And after that, the price should bounce or trap off of the 50. As you can see right there, price gave us pins. Price gave pins to the 50 right there. Gave pins. There were pins. So it is because of these moves that we know that price is definitely going to come. So after price gave us pins, what are we now waiting for? We notice an engulfing candlestick pattern here, and after that, our candlestick patterns. After we get our candlestick patterns, close below the 13. After that, no time to waste, no need to think. Without thinking, without I don't know what to say right now. You just need to enter the trade right there and then. No asking what, without thinking, without doubting, come on, you just need to enter the trade at that moment. No time wasting. Then what do you get? The market rewards you with what, guys? With 50 pips. Beautiful. If you decide to exit with using our 13 EMA criteria, the market will still reward you with how many pips, guys? 30 pips. Beautiful. Let's move on. So this one is in an uptrend now. First things first, the anchor. This one, because it's an uptrend, the W anchor, and same rules apply. The 13 to 50 cross. The second one, the third one, the first pullback to the 50 EMA, which should be within the range of 25 to 50 pips. After that, price sort of like break through the 50, but then came back and closed above the 50 and above the 50 and the 13 EMA with a big shifting candle. Same thing. Entry. The entry should be right there, and no messy, no thinking much, no overthinking. You just need to enter the trade right there. Just enter the trade there, and after you enter the trade, if you manage to spot it out and enter the trade, the market will reward you guys with how many? Firstly, 35 pips, and if you decide to hold a bit longer, 55 pips. Then you're out of the market and you'll be done for the day. Then you have plenty of time with your family, friends, with your other businesses that you'll be doing, because trading is more freedom, guys. You should not, just because you're trading doesn't mean that you should always be staring on the charts or what. You just need about 10 to 15 minutes. You just need about 15 minutes to you just need about an hour or 2 hours. Then you're done for the day. Then you have plenty of time left to yourself to do other things. So first things first, anchor to the left, 13 to 50 EMA. That happens during the Asian. So the time that the London opens, you know that the 13 and the 50 happened already. What are you now looking and waiting for? You're now waiting for price to bounce, to trap off the 50 EMA. Since it breaks through the 50, then it came back and break and close above the 50 again, and this time with a shifting candle. And not only did it break above the 50, it also broke above the 13 EMA and closed above them, the 2 EMA. So or strong buying. So the entry will be right there, then you just enter and model, smile all the way. Price will be moving your way all the way up to what? 45 pips. Firstly, decide to hold a bit longer, 65 pips. So this 45 pips would be 45 pips and exit will be due to this blue tracer right here. If you decide to get out around 30 pips basing on the 200 radius, do fine. Then this one, if you decide to enter basing on the average daily range at 65 pips, is still fine. They're all our exit points, and they're considered the same, and they consider to be having the same value. They're considered to be having the same value. So another chart right here, same things. Anchor 1350 cross, first pullback pins to the 50, close with the shifting candle below the 13 EMA entry, and the RSI crosses the signal line and the market best line right there. The market rewards us with what? With 50 pips. Beautiful. Voila, 50 pips right there. So the H1 50-50 bounce, same rules apply as the ID50. Same rules, guys, same rules. But now that you know better, because of the video that I made on the M&W of the Mayo, you now know how to balance the two, the H1 50-50 and the ID50. You now know how to mix these two and you now know how these two relate, and you now know how to even make much more profit from these setups. You now know another type of setup, and that is off of the EMA now. Off of the Mayo now, not only the water, the Mayo being the 200 EMA. And you now have, so I'll link this video it should be on the top left corner right now, so kindly click on it and watch it too, since it's very important and it's very profitable for you and for everyone who uses this strategy. So what do we have on the H1 time frame? We have the anchor, this one a bit ugly, 1350 cross, then our entry right there, then price closes up, then we have a pullback to the first pullback to the 50, price breaks and then breaks again, closing above the 50 right there, then continuing to the upside now. And if you manage to spot that trade and enter into it, this would have rewarded you 90 pips. If you would have held it much longer, 170 pips for you, my guy. 170 pips for you, my friend. Yes, my friend, that's beautiful, I know. First things first, let's tick anchor 1350, first pullback entry. Our ticks are in place, then the other tick, profit. Let's continue. Trades that did not work out. So apparently, as you know, that market makers do what they want, and we have what's called market structure. I'm still to make this video on market structure. Market structure is when the market makers break the structure of the market. So when, sort of like when the bias of price changes, cause when price was going in an uptrend, they now change to go in the downtrend. That's the break of the market structure. So usually it's indicated by this failure. Usually it's the cause of this failure of our trades, of this trade setup not to work. So usually when this trade setup does not work, just know that the structure has been broken. I'm sure I'm 100% about this. I've backtested this 1,000 times, and you should do the same. You should start doing the same if you had not. So what do we have here? We have our anchor being formed right here. After these three pushes, the first one, second one, and the third one, after these pushes, we have our anchor right there. Then we have our 13 EMA cross. Then we have our bounce pullback here. Then price, instead of going price didn't do that. It respected this high right there, that support area right there. Let me clear. It respected this support area and then failed to break it, and then came and our stop loss, probably if our entry was right here after the bounce, after the close above the 13 EMA with the shift candle, our trade entry would be there, and our exit probably would be right below here, about there. Yeah, would be right there. Let me mark it well. Our exit would be right there. So price came back and hit our stop loss, and after stop loss is hit, yeah, we now know that the market structure has been broken, and we are out, and we wait patiently, not angry, but then we are happy at that time because we know that something big is about to come in, so, and we know that we are going to make bigger money. So in our risk management is on point, and so we are not worried about any losses that we make personally, and for my students as well. None of us are worried about our losses that we make, because we know that we will remake it. And once our stop losses are lessons, period. Losses are lessons, period. Losses are lessons. We learn from each loss that we make. So that's why we are all learners. We all enjoy learning. As for myself, I also enjoy learning from the market, and for my students, they enjoy learning from me and the markets as well. So we would have learned from that, and we enjoy learning, so we'll be happy for learning. So there's no sorrow and sad trading when you're trading with us. That's why you should join the team. So we know the market structure is broken, but then we would have taken losses. That's fine. We had for a bit, since it's losing money always hurts a little bit, but then we can control ourselves. We don't now enter trades here like we are idiots here, like we're still beginners who have no mentorship, and start getting angry and then blowing account with just one move. No, we don't do that. We wait, we smile, we close the trades, we close the laptops, and go off and do other things. And usually when such moves happens, we'll see after, maybe when we no longer have other things to do, because once we enter our trade, for me, what I do and what I teach my students to do and encourage them to do is that once a beautiful setup maps out, and the trade is entered and the parameters are set, the stop losses and the take profits are set like that. Once that the stop losses will be right there and the take profits will be right there are set, I encourage my students that we step off the markets, we slam the laptop, we close the laptop, or close the MetaTrader, start doing other things, watching YouTube videos, watching my channels like this one. I encourage them to start watching my channels on other trade setups, or watch videos, or watch some personal developments. I encourage personal development very much. So that's why I'm saying watch some development videos on YouTube, or maybe rather watch a movie with your wife or spouse, or play with your kids or something. Then it's after we are done with all those things, when we open to check for our profits, then we see that our stop losses are hit, and we are not worried about that, because we understand the risk, and we know that it's also a possibility. The markets are just like that. They are after our money. So when they get the chance to get a bit of our money, we should not cry or be sad. We should actually enjoy, and not enjoy for that moment, but enjoy that there is something that they have taught you that you're going to be mindful of the next time, and you're going to avoid losing your money to the market makers again, and the next time you're going to profit from such a move. So from this lesson that we took that next time we should also wait and check to see if there are not any highs or lows close by, like this one. If we were taking note of this high right there, we wouldn't have entered the trade. We would have waited for this high to be broken, and the trade would have made here. So we learned a big lesson there, and it was beautiful. That's why we smiled. So same things, the anchor right there, anchor 13 EMA cross right there, Then price, the first pullback, price just came here, broke and just went and came back later. Then we came and closed above. Just a base setup. Now stop loss would have actually on other cases, if we had entered our trade here on this candle right there, that's when it would have been stopped out there. But if we had not entered our trade here, there, we would have been anticipating to make the trade right there, right here. But then because of this candle, and because, like I said, always for this pullback, this pullback that you'll be waiting for, always make sure that this pullback price bounces off the 50 or traps off the 50, not just when once price gets to the 50 you enter the trade. No, that's not it. Stick to the rules. Refer back to the rules. If you didn't understand this, refer back to the rules. Great, finished. So what I cannot do right now, after this finish of this document, I cannot just exit or end this session without giving you guys an example of what I'm teaching. Then what will I be teaching? Why will I be teaching if I cannot, or if I'm not in the position of being able to give you guys a beautiful example, or 2 or 3 or 4 or 5 or plenty of them. Right now, as you see, these are the present days. This is the present price action that has been happening. This is what happened today. Let me mark as I'm talking. This okay, guys, to be giving out all this information here out here for you guys is because I love you and I want you guys to win. So you need to win, guys. You need to win. You need to take this lesson seriously. You should be taking your notes, and you should hit my Telegram. Everything is in the link in the description box. Hit my Telegram for questions and assistance. I'll always be there to answer and assist every way I can, and in every way I can do that. So this is today. This is yesterday. This is the day before yesterday. Sorry. This is the day before the day before the day yesterday. You don't know what I'm saying. This is the day before. This is the day before the day before the day. Come on. You know what I mean. Let's move on. So in these 4 days, let me show you the setups right here. From what I've just told you, this is live, no faking. This is an XM Global real serventing account. It's a real account right there. No faking. I'm not faking any of these things. So what you see here, from what you've been taught, from what I've been teaching you guys, an anchor. Let me draw it well. An anchor right there. First one, our 13 to 50 cross. Price came and break above there and break below the 50 EMA, giving what? Giving and breaking below the 50 EMA with this beautiful shifting candle, and at the same time it broke below the 13 EMA. So entry will be right there. This is yesterday. I took this trade right there, and let me calculate how many pips. As for me, I got 30 pips out of here, as you can see right there. This mark there was another trade. I took 2 trades. This was based on the other video that I told you that I'm linking. I'm going to still link it. I took 2 trades. This one was the first one and this one was the second one, because of the 2 videos that I just, guys, I'm giving you profitable information that you can start making now. As you can see, these 2 videos, this video I'm making right now and the video that I made the day before yesterday, those 2 videos, those 2 setups that are in the videos, I made money using them right here. And I can still show you, and I am still ever going to continue to show you guys. I don't hide. I'm always transparent about this. That's why you should also follow me on my Instagram, Defeat the Market Maker. Guys, it's too small, and we're looking to grow it to get 1,000 followers. Join the Telegram community if you had not joined it. Guys, let's just make money together, guys. Let's make money together. Let's make money together. You're all my brothers and sisters. I don't want to lose you. I don't want to leave you behind. That's why I encourage you guys. Let's go together on this journey. So this setup I taught how one could have caught it and how I caught it. This setup again, I'm talking about it right now. So how many pips did I? How many pips could one would have got? I got 30 pips and I was out. One could have got 50 beautiful pips. I got 30 right here. Around here. This is where my exit was, 30 pips. One could have got 50 pips though. And if they would have held this trade into today's London session, 74 pips using these setups, guys. This is real things. This is happening, and this is no joke or no play. No play. It's money. Money is made after money. So as you can see, that's the ID 50 for that day. Let's move on. There are plenty. I'm just going to show you a few of the from the recent days. So as you can see right here, our anchor. I like it when I talk of what I teach. Anchor. It gives me confidence on teaching you, and I know it helps you too, guys, to understand me and to understand the setups and love the setups and fall in love with the setups, and subscribe for my mentorship and for my paid BTMM signals chat. It allows the flexibility for us all to work together. So our cross will be right there. Now we're anticipating for the bounce. We're waiting for the bounce, for the 50 bounce. Oh no bounce. Then bounce actually happened here. A beautiful W. Then the entry will be right there. I didn't take this one, but I'm just showing you just for the sake of the strategy. Then after the entry would have been made right there. Oh, it gave us tops of 23 pips, which is still fine. 23 pips times 100 lot is a lot of money, and depending from where you are, which country you are from, America, Africa, or whatever, it's still a lot of money. Peak 1850 cross, bounce off the 50. Yeah, the pullback was right here. Then it gave a second leg, shifting candle of the engulfing. The entry would have been made there. Guys, as you can see, this is just recent. I don't want to continue going back and back. 30 pips. I remember I must have taken this trade. I don't remember. I take lots and lots of trades. For this is just trade setups that one could have made from one particular pair, and I trade 2 pairs and sometimes 3 or 4. So as you can imagine that I'm always looking for these setups, and I get plenty of them. So sometimes I don't remember all the trades that I take. I just know when I see my trades that I am looking for, that I take. Anchor setup, the bounce of the 50, pullback, gave a beautiful triple bottom right there. Then close above the 13 and the 50, and I see there's also the 200 right there. Guys, it's almost, this thing is like it almost happens every day. Like I'm being for real. If it doesn't happen like that, the market structure breaks. The market structure will break. After the break, you can still get a move from the other way, and I promise you, as you can see here, I want to show you this anchor. Our anchor will be here, to the left. Then the 1350 cross would have been okay there. Now we are anticipating and waiting for our pullback to the 50. Then the pullback does not happen. all this way, pullback does not happen, then what then happens? It went to break above the 50, then it tested here, and it didn't close below the 13. It continued to surf above the 13 and the 50. It sort of like was bouncing off on the 50, and structure at that time, at that moment of time, structure was broken. Then what then did you notice? You noticed that another anchor was formed. I must be a genius. I feel like a genius. This strategy is making me feel like a genius, and I know it will do to you too after you decide to understand it well. Right there, 1350 close, first one, second one, pull back, price give us this beautiful bounce of the 13, and it gives us our entry right there, and all the way here. I'm not going to stretch out and count how many pips, but I'm sure that's above 30, almost if not 50. So as I said, if you fail to get a trade entry in this direction, just know that the other direction can give you the trade setup. So you can just make this trade your only trade setup that you take. And I'm giving you valuable information that you never get here on YouTube. This is the best information that anyone has ever put here on YouTube. I'm sure about that. And a simple like and subscribe and share I would appreciate that so much. I'm tired. I cannot go. As you can see, first things first, I'm just going to do this last one, and this one is the last one, I promise. Anchor 1350 cross, price pullback right here. After price pullback, it came back and gave this second leg here. Second leg, the entry will be right there. Right there. Right there. After a shift candle above the 50 and close above the 13 EMA, that's where the entry will be made. And how many pips? Let me. Not many pips though, but then it's still something. You would have gotten something out of this. 20 pips times 100 lots, that's around if not 20,000, yeah, that's about $20,000. And on a 10 standard, on a 20 pips on a 10 standard lot size, 10 pips on a 10 standard lot size, that's I think 2,000. Yeah, if not mistaken, it must be 2,000. I'm not sure about those figures, I'm guessing right now, but you will confirm for yourself. So guys, please subscribe to my Telegram channel. Join the Telegram channel. Follow me on Instagram on Defeat the Market Maker. Subscribe here on YouTube, and please share with other traders, and please press the like button and the notification buttons, so that each time I post these profitable setups here for free for you guys, you get them instantly with that ding sound. And you benefit tremendously. I know that because I'm benefit for myself. The reason why I don't show my trade setups and my profits, I don't want to attract the wrong audience. I want to attract audience that want to learn. I want to attract audience that are willing to learn and that understand the markets, who after I show them backtesting like this of setups that I'll be teaching them, and show them actual backtests like this, they will know and they will believe and they will understand that truly speaking, this strategy actually works. Not showing you I do show my profits sometimes when I'm advertising my funded account. By the way, if you want to get funded, if you don't have enough money to trade, I have a legit trusted company. I've linked them in below. You can get your funding starting from $155. You can get a $25 account that you receive 10% of every profit that you make. If you even make 10,000, you receive your $1,000 profit after 2 weeks. I've made a video on that. You can watch that video and it will help you know what I'm saying and believe what I'm saying right now. And so guys, peace. Please watch the videos, click the playlist chat, right next to right next there, and click the subscribe if you had not. Peace. I love you all. Stay safe.